Bitcoin is a beast for a few reasons. One, it is the largest market cap of cryptocurrency, period. It drives the entire market. It's over 60% of the entire market, and it's still not even as big as one company in the NASDAQ. Apple, Nvidia, right? Microsoft, all these companies are bigger than Bitcoin, and the entire market cap is the size of one of those companies. Millions of cryptos, size of one company. We are very, very, very early, but since we are early, this asset trades, it's correlated to a few things and it changes based on the opinions. No one knows what to do with it. Sometimes it's correlated to gold, sometimes it's correlated to the NASDAQ, and sometimes it's correlated to M2 global money supply. And I want to talk about the asset and what is good for it and bad for it. Okay. Now, before I get into that, for those who do not know, my name is Jake Tullis. I run a digital asset hedge fund called Bleeding Edge Capital based out of Cincinnati, Ohio. We are a research first, a ground roots driven fund that is discretionarily long. I have developed this strategy over the years, leveraging my 10 years plus of software development experience to underwrite these networks, protocols, software, which are tokens, which are blockchains, which is crypto. Okay. And my finance degree to understand this asset class and, have success. So what I want to do is get into some of the charts that make me think Bitcoin could be getting priced lower in the next 12 months. And it's really important to understand that Bitcoin does good with inflation. Inflation is like gasoline on a fire or oxygen, right? When you got little embers and you blow it and then it erupts into a flame, that is inflation. So on the other hand, what can cause Bitcoin to go down in value is deflation. All right? Makes sense. Those are two opposite ends of the spectrum. And I have a feeling that we are going into a deflationary period. It's a thesis I've been working on for a while. I've been shopping it around, and I want to put it on YouTube and just hear what you all think about it. Okay? So, first things first, we have Fred, our best friend Fred. This is the database of our Federal Reserve. This is the central bank's data, and they publish it. They have to. So the very first thing to look at is debt. This is like our country's debt to income ratio. When you apply for a mortgage, you get your DI ratio, right? Now look at this. This is decent. This is someone able to buy a decent home. We're now up to 121, 122 with a little spike up. Okay. But we peaked here right around 132. So we are trending down. I think we're going to be making lower highs and trending down in our debt to income ratio, which is amazing. That heals our economy, makes the dollar weaker in a sense. Inflation makes it, there's more supply and there's a lot of demand. We're the only country that can print money and people buy it. They or not buy it, but they get it. They get the T-bills. Like there is demand for dollars because the trade is generally settled in dollars. So they need dollars to make products go around the world in general. We're the global reserve currency. When we are reducing our income, that means there's less inflation. So this chart means that there is less inflation than there used to be. We are running at a healthier rate, which is deflationary. We're still above 100, right? But it is trending down. If this thing ticks down, we have lower highs. If I go to the dollar, take a look at this. Trading view is so stupid. This is our dollar. 100 is even. We're under 100. We just broke 100. Okay. This is inflation. This is deflation. When I go to the budget surplus, look at this. This is inflation, right? Because we're running a deficit. And now we're moving closer. We're making higher highs. We're moving closer to a surplus. A surplus is deflationary. Now, if we go talk about Trump, okay, Trump is saying he wants to fix the deficit. He created a Department of Government Efficiency, DOGE, to fix the deficit. Fixing the deficit is called running in a surplus. And as I just showed you, that is deflationary. The more that surplus gets closer and closer, the more the dollar goes down. In that scenario, commodities do relatively poorly. Okay, since currencies use dollars to settle trade, and since infinite amount of currencies flood into Bitcoin, it's a global asset, no different than corn, beef, oil, right? Actually, here's another sign. Let's go to um, let's go check oil. Look at that. As inflation went up, we were at 100 something a barrel, and we are trending down. We just broke below 60. The last time it was below 60 was before all of this money got printed. All of this money, you might say, well, take a look at this money. Look at this inflation. It's more money than you could ever fathom. Look at that. It is straight up. And, say what you want. This is still Trump's term. Biden took us to here, but hey everybody, it's JT. Just in case you didn't know, I would love a sub. Almost 97% of you that have viewed our content have not subscribed, and it would mean the world to me if you just hit that sub button, give us a like, and let us know how we're doing. All right, back to the content. This was the CARES Act. This was Trump. M1. We go from 4 to 16 trillion overnight. That's $12 trillion just dumped into the market. And basically, the correlation is strong with this one. You guys see? There's that 2020, all the way up, 90, all the way up to 115. That is directly correlated to the M1 supply. So, with oil going down, with our surplus increasing, I just see a case for deflation forming. Deflation achieves all of the fiscal policies that POTUS has talked about. It could solve the housing crisis. Housing will get cheaper. It could solve the cost of living crisis, right? Because commodities are going to be cheaper. They're going to cost less. Eggs, corn, beef, gas, right? Oil's dropping, gas. This is all right in alignment with the fiscal policy of POTUS. And if you go look at the data, it looks like he's doing what he says he's going to do. Promises made, promises kept. And deflation in general is great for an overinflated economy, which is what we are dealing with. That's what he is trying to solve. It's going to hurt, but I do believe that's his target. He wants to get the economy back to neutral, get rid of all this inflation and all this hot air in the market, get the 10-year lower so people can lever up, and then have a huge transfer of wealth, and we're off to the races again at a healthier pace. 2 to 3% instead of 20, 30%. That's a 10x increase in our deficit. And it was because of the money they printed, and specifically that Trump printed, really. I mean, Biden didn't help at all, but between the two of them, they printed, more money than has been circulated in over a century. So there is an answer to that, and it is deflation, I believe. That is bad for Bitcoin in the short term. Short term being inside of a year. Long term, it could be one of the best opportunities to invest in crypto, period. And that's why I'm so excited to be in this space. I'd love to know what you all think, though. Do you think we're going to go into deflation? Let me know in the comments. And until next time, take care of one another. Peace and love, guys. I'll see you.